Hey, what is going on? My name is Hazeeq and welcome back to another technical analysis video. We're going to be taking a look at a rising wedge in this one. We're going to see how the pattern is formed and what is the technical target out of this pattern. What is the percentage of chance that you may break to the upside or to the downside? We're going to talk all about that. So if you're excited, feel free to leave a like, enjoy, share the video, and let's get straight into it. So this is the Bitcoin chart on Coinbase from TradingView. And I do have a Fibonacci retracement, but you really don't need to worry about that. So I'm probably just going to remove it for this video because it really doesn't do anything for us. So as you can see right now, the yellow trend lines here, if I can just show you. So this is called a rising wedge. So basically this is an uptrend, right? Because you're creating higher highs, you're creating higher lows. So your each high is higher than the previous one and your each low is higher than the previous one. So how is it possible that this is a bearish pattern? Well, the only thing is that because you're getting tighter at the end. So this is some sort of an uptrend, but this is an uptrend where you start getting tighter in this triangle, right? In this wedge. And this usually follows this usually is followed by a capitulation or a dump from the pattern. So if you're looking for the technical target of the pattern, that is going to be very easy to get. So you have to look back to where the pattern was formed initially. And in this case, it's right over here. This is where the support was formed of the pattern. So you obviously had your first touch here, but that is not the point of creation, right? You need two trend lines for the pattern to be valid. And basically you created the resistance and then you came back down, you created the support. So that is when the pattern was created. So that is going to be your technical target. So you can drop in a trend line, okay? And you're gonna know that that is your technical target. So in this instance, the technical target for Bitcoin was at $19,391. And we did talk about this pattern on the channel extensively. And I did warn you guys that we are in a bearish reversal pattern or a bearish continuation pattern. The difference is a bearish reversal pattern happens in an uptrend, okay? You spot that in an uptrend. For example, you did have some sort of a rising wedge here for Bitcoin, as you can see, if I can just get the trend line. So you did have some sort of a rising wedge here for Bitcoin on the daily chart all the way back in 2021. As you can see, that was a bearish reversal pattern. Now, why is it a reversal pattern? It's because the trend reverses after the pattern has been completed. So as you can see, you're in an uptrend here. This is a very, very clear uptrend, okay? A long-term uptrend here. As you can see, you have an uptrend. So after the pattern is completed, the trend reverses and you start creating lower highs, lower lows, and you continuously dump down. As you can see, you created a downtrend after an uptrend, okay? So that's why that is considered a bearish reversal pattern, okay? And if we go back to our current rising wedge that we're looking at over here, as you can see, this is a bearish continuation pattern because the pattern is found in a downtrend. As you can see right now, it's very apparent that you're in a downtrend, right? Because you're constantly creating lower highs and lower lows. So you are in a downtrend and you find this local uptrend here in a downtrend. So this pretty much uptrend doesn't count. It doesn't matter. You're still in a downtrend overall. That's why this is a bearish continuation pattern, because after the pattern has been completed, you continue with the trend, okay? So it's a continuation pattern. And we don't know where the bottom is going to be, obviously. You can jump into my Patreon. We're going to have a podcast regarding that later on. But for now, we don't know what the bottom for Bitcoin is. So essentially, a rising wedge is the opposite of a falling wedge. Now, there's a 25% chance that you are going to break to the upside from a rising wedge. We have seen that happen previously, and it is possible, right? If you have some sort of a pattern, you don't have 100% guarantee that the pattern is going to play out exactly the way it is supposed to. But a lot of the times, it actually, does happen. For instance, here, you can see that our technical target was at $19,400. And as you can see, that is exactly where we landed. From this breakout point, we went all the way back down to our technical target, and we did go a bit lower, but that doesn't really matter. What matters is that we reached our technical target. So this was a very, very good opportunity for you to either sell and take some profits and buy back in 20% cheaper, or you had a 20% leverage trade opportunity, which I don't leverage trade and I don't recommend doing it, but that was just an example. And as you can see right now, we are hovering around this sort of technical target that we had out of this pattern. And yeah, this is basically how it works. So you have to be careful not to call a pattern. For example, be careful calling this a rising wedge. As you can see, this over here, this is not a rising wedge. This is a descending triangle, because you have a horizontal support and you have a descending resistance trend line. Okay, so that is a bearish pattern as well, but that's not a rising wedge. As you can see, a rising wedge usually has like a 45-60 degree angle. And as you can see, the descending triangle is also a bearish pattern. And in this case, this was a bearish continuation pattern. But you can see that you actually ended up breaking out of the pattern. You ended up, for example, if you want the technical target was met. Okay, and this is just an example. This is a video about the rising wedge, obviously, but I'm just giving you an example that bearish patterns sometimes tend to break to the upside. So sometimes you can see this happens, but after, at the end of the day, you still dump, right? But you had this trade opportunity. You had this opportunity to trade 10%. So that's what I'm talking about, the 25% break to the upside and 75% break to the downside. Obviously, we got exactly what we wanted to get. We got the break to the downside, and everyone was waiting for that. But some people got very bullish on the rising wedge here, and well, they didn't even see the rising wedge. They were simply seeing the higher highs, higher lows, and they thought, well, the bull market obviously arrived. And I was telling you guys that this is not your bull market. This is simply a liquidity grab, or the exit liquidity for a lot of major players, and this is just to liquidate a lot of the long positions that people are going to start opening up. And here they liquidated a lot of the short positions. Here they liquidated all of the short positions over here, right? If I get the brush. So once you were going up here, all these short positions were getting liquidated. And once you dump down from here, all of these long positions were liquidated. So yeah, that's just something that the markets do. And hopefully this tutorial was very easy to understand. There's really nothing difficult about this pattern. Obviously, for a valid support and a valid resistance level, you need at least 2 touches. Okay, so in this instance, we do have 1 touch here, 2nd touch here, a 3rd touch here. For the resistance, you have 1 touch here, 2nd touch here, 3rd touch here, 4th touch here. Now, you can't ignore wicks, right? You don't need the wicks for the patterns. You can only use the candles, or the body candles, or the body candles, yeah, or the bodies of the candles. And yeah, that's pretty easy to do. And once you get used to these patterns, you're gonna start spotting them just like that. After doing technical analysis for a very long time, I don't even need the trend lines because I can see the pattern, right? And yeah, I guess it just comes with experience. But yeah, hopefully you understood everything, guys. If there are any other questions that you have regarding the rising wedge, let me know down below in the comment section. Feel free to follow me on Twitter and Patreon. I'm going to catch you in the next update. Goodbye and good night.